So recently there's been it's just a bloodbath in lithium, and a lot of the higher quality developer names that for the longest time I even stopped following, and I kind of crossed them off my list because the shares just got so overbought. I just didn't think they were kind of worth chasing anymore. And then lately they've just come crashing down, and this has kind of been a hot topic on the MBG Trends room. And that it's a good segue because there's this like company in particular, Nemaska Lithium, which is actually in Quebec, and it's a very advanced stage project. It's hard rock lithium, and they're actually going to make it's going to be vertical integrations where they're actually going to produce the final lithium chemicals, the lithium salts, the lithium hydroxide, and that's a much higher value end product. So there's a lot of potential with this company, and for the longest time it was kind of an industry favorite and darling, and it's always trading at a good valuation. And then they did a financing, and they raised $1.1 billion Canadian, and the terms, a lot of the financing was done at $1 a share or $1.12 per share. To my knowledge, there's no warrants or anything like that. That's affixed to it. But then because of the weakness in the lithium market, Morgan Stanley came out with that report in February how they expect prices to crash by 45% over the next few years. I think a lot of factors played in, and you could even throw in seasonality, where lithium is generally kind of weak in the summer months. But Nemaska Lithium is down 70% year to date, and I was just looking at the stock, and we were discussing it on MBG Trends. It was like, well, they just raised $1.1 billion. That's a good chunk of change. So you would have to imagine the companies involved that actually signed up for the placement, because like one of them was like SoftBank, and they agreed, to $90 million at $1.12 per share. These companies are like industry leaders. They would have done a good amount of due diligence. So if the project was fatally flawed some way, those red flags probably would have prevented the financing from going through. And they have, I think like 90% of their offtakes that are already secured. So, they're trying to produce, I think it's like 34,000 tons of, it's LCE, so that's lithium carbonate equivalent. So it's kind of a mixture of mostly hydroxide, some carbonate. But, it's basically 90% of that is already accounted for in offtakes. So, you're getting the real big, cathode manufacturers, the battery companies. You have LG Chem, FMC, and what was the other one? Johnson Matthey is a big one. And then SoftBank has kind of that opportunity to take supply as well. So you see all this due diligence and everything, and, the shares are down 70%, and they actually hit a low of 65 cents. So this actually ties really well with the whole private placements, and especially for like my retail friends, for example, who are busy working all day, and they even text me and stuff, and they're like, I don't have time to follow up on the news. Like, why is Nemaska Lithium, and this other one is Lithium Americas. That's another top developer. They're working on a brine project, but they have SQM as a major partner. So even like the retail investors aware of these companies, and I'll get texts and they'll be like, what's going on here? Why are these stocks crashing and burning? Should I start paying attention? And that's when I kind of like to put it, slide that in, where it's like, well, if you get in today, you're getting at a like 35% discount to the last placement, which had no warrants either. And, it's fully funded to production. I mean, because a part of that, that capital raise is you raise contingencies, working capital. Like, you should have a decent buffer. I mean, it's mining, so anything can go wrong. But I try to like look at it from that angle, where I'm explaining it to more retail friends and just saying like, unless something catastrophic happens, there shouldn't be any more financings. So dilution should be done. The share structure should be what it is, and it should be kind of a more straight shot path to production, from here on out. And, if you can get in 35% below what the recent financing was, then no guarantees again, but you're giving yourself a better shot than if you were like chasing this thing to the moon, which everybody was pretty much doing in January, beginning of this year. Nemaska was a $2.40 stock. and all the lithium developers, producers, explorers, they were all trading at 52-week highs in January. And, everything's down like 50, 60, 70% right now. So, as a retail, I mean, this is the thing I kind of harp on a lot on the blog is like you want to look for opportune entry points. Not everybody agrees with that because, one cause for debate is people generally like to say, well, the technical analysis looks like garbage at the bottom or, at the 52-week lows. But, on the flip side of that, if you're trying to make the argument like the technicals can't look like any better at the 52-week highs and that's the signal to buy, in a way, I mean, I could argue that's a lagging indicator because when everything looks so perfect, you're, just like the RSIs are like, out in the sky, they're at like 70 to 80 and, like just everything looks good. Technically, that's usually the time when you should actually be selling rather than trying to jump in and pile on late, just as retail. I mean, that's how you open yourself up to get slaughtered, I think, because these markets are just so cyclical. And lithium has proved to me, like kind of without a doubt, is as soon as a mainstream media article hits, and you get somebody like that's, quote unquote credible, like Morgan Stanley, for whatever reason, I don't even know like why they have credibility in the lithium market, right? It's a very nascent space anyway. But they come out with some report like this, and like I think it was 2 years ago, it was Macquarie in Australia. They came out with a report. It's like almost like a cycle, like clockwork. Every single year around this time, lithium stocks just get killed. So it's a very new technology, new emerging market kind of thing with electric vehicles and all that mass adoption stuff. But I just look at it like it's so cyclical. It's almost more cyclical than even gold. You want to be really careful. It's just to keep it really simple. I just say like if you can buy near the 52-week lows, then you're giving yourself a better shot to make money. Because if you're chasing this stuff like in January when everything was at record highs, then I mean look at it now. It's not fun to be like a Namaska shareholder and you're down 70% like year to date. I mean, the stock basically needs to go 3x for you, 3 to 4x for you to even get back to break even. So, I mean, that's just something to keep in mind. I think is really important. Is you got to know where you are in terms of like not only like risk versus reward, valuations, but the macro sentiment, like everything. And as a buyer, you want everything to be negative. That's the best time to buy.
Yeah, I'm looking at those charts that you've just mentioned, and wow, now they're starting to look juicy to me. This is the stuff I like. Yeah, I'm the person grabbing all the falling knives. Like I have no hands left because like that's what I do. That is really my only edge, to be able to have the guts buy when it looks like crap.
Yeah, I'll add one more interesting nugget that might be interesting, I guess, for just people who are following lithium. Usually I like to look for stories where there's kind of a big disconnect with kind of the macro trend and the individual stock. Like preferably in an ideal world, the macros can't look any better, yet the micro, which would be the individual stocks, are just getting killed, right? I mean, that's kind of, that's we all want that scenario. But, I don't want to hype it up too much. But in this case, if you actually read the quarterly reports, which I have, like for different lithium producers, like I was reading the Orocobre one, Galaxy Resources, because it gives you kind of a feel for kind of the overall market sentiment and what customers and end users, all that stuff are looking for. So when you digest that, I think specifically mentioned in the Orocobre quarterly is they said there's concerns about lithium oversupply and all that stuff. Yes, it's true. There's a lot of ore that's coming out of Australia right now. In particular, Pilbara Minerals and Altura Mining are kind of ramping up to. I mean, they just got into production, so it'll be a while. Let's say it'll take like 8 months. Chinese converter companies are overloaded with just ore, or not ore, but like spodumene concentrate. So they try to take that and convert it to the battery grade lithium salts. But the point of emphasis worth noting in the Orocobre quarterly was they said even though the converter companies have like excess of material to work with, there's a huge bottleneck in the actual conversion process where they're only running at 70% nameplate capacity, and they're really struggling. I mean, anybody in the lithium business knows it's extremely convoluted, complex stuff. It's just not that easy. The market has no clue at all on how difficult it is to produce battery grade like lithium material. Like it's just not a trivial process. Especially if you're going from like a brine source, like because Orocobre is kind of the poster child for all this, where it's been like almost like 2 or 3 years and they still haven't ramped up to nameplate because they just keep struggling technically to get everything and all the processes right. But it's just interesting because it's basically saying, well, everybody's worried about crashing lithium prices, but even if there's enough like feedstock in this material, we can't really process enough of it to actually get you the final end product, which at the end of the day is what matters most, right? That's the lithium carbonate, lithium hydroxide. If the market can't really be flooded with that material because there's a bottleneck, then that kind of bodes well in the sense where prices shouldn't come crashing through the floor, like what Morgan Stanley's saying. Right now it's pretty healthy. Let's just say, ex-China hydroxide prices are about $14,000 per ton spot. I mean, that's a really healthy margin. I mean, Morgan Stanley's calling for like $7,000 to $8,000 range, so that would be a huge annihilation of the price. But I read that, and then if you read more and more articles, they're saying things like hydroxide is going to be the future, preferred material, for lithium. It's gravitating away from carbonate. They want to go to hydroxide. It's a higher quality, better end product. If you look at Nemaska, for example, it's like their end goal is to produce like 2/3 of their overall product portfolio is going to be devoted to hydroxide. So in a way, it's like, okay, you have this up and coming producer, which should be in production in roughly 2 years, 2.5 years or so. And they're going to be producing hydroxide. The world's going to need a lot more hydroxide. There's actually, like, outside of China right now, there's like, and the brine operations, of course, in South America, there's like nobody else that's really producing hydroxide. That could really work out quite well if the company can execute. They can get the project out on time, on budget. And, I live in the Bay Area, and like every day I tweeted about this recently. I was like, I can't even go on a 5-minute coffee run and not see like 3 or 4 Teslas. Like, for the longest time, the last few years, like, cause I've been tracking Tesla since pretty much 2013. I used to, whoever I'm with, I always just point out, oh, there's a Tesla. Cause, for a while it was kind of like, like, I don't know, it's like finding like a unicorn or something. It was just like, it's something that nobody would ever see. You point it out.
I still do that.
Yeah. So when I used to do that back in 2013, 14, whoever I was with, they would always be excited too. They're like, oh my God, that's like the first time I've ever seen a Tesla or something. Or like, wow, you just don't come across them very frequently. So, I mean, even to this day, it's kind of a forced habit where I'd be going out with people who work at like Apple or Google or whatever. And, they are in high tech, they're affluent, they have money. Like it's really nothing. They see it in the parking lot all day long. But, like I was in Manila for 3 months, so I'm kind of away from everything. And I'm like just still pointing them out, especially the Model 3s, because that's kind of the new thing right now. And it's getting to a point where I'm just looking ridiculous. And people are like, what is wrong with you? You're just pointing out like something that's so trivial. It's like, I see like 10 or 20 of these every day. It's like it's like me pointing out like there goes a Toyota Camry or something. Like it's getting to that point, which I think is actually really good for the whole macro thesis on where EVs are going, because I just think Silicon Valley is probably going to, if they're not at the forefront, because that's basically where Tesla is anyway, but, it's up there. I don't think it's quite on par with like Shenzhen in China, like what they're doing, because they've already rolled out like an entire 100% fleet of electric buses and all that stuff. And my friend actually made a trip out there, and he said he's blown away about like how night and day difference it is out in that parts of the world where they've completely, jumped on board with this whole EV thing. But, Silicon Valley is usually at the forefront of a lot of the technological shifts. So what I'm seeing here is just, it gets me really excited for the whole macro thesis and where it's going. So, it's a huge disconnect right now because, again, the share prices of a lot of these lithium, cobalt, like, even like it's really crazy if you look at even something like copper, which has gotten annihilated the last like 2 months or so, right? I mean, for a while copper was like 325 and now we're like 270 or something, but if you actually follow the macro trends, all it says is like, the outlook for even something like copper and nickel, I mean, is going to be huge, right? And we all know about kind of copper and the low grades worldwide, and there's not really that many, just prospective copper projects because there hasn't been that much exploration. So, that's like another market that gets me really excited because it's like copper prices are getting killed, but the future outlook is so great. And, now is a good time to start looking at these stocks that, like are not moving. Nick will probably appreciate this one. Is I think yesterday there was a headline that came out from Mod Resources, like significant drill intersect. They might have made a new discovery or something, but I think they're trading halted right now. But like Metal Tiger was trading, and it wasn't really moving that much because. Yeah, I mean, I don't know what's going to happen when Mod goes free trading, but maybe if the sentiment is that bad, it might not even move at all. And these are kind of the opportunities you look for as a retail investor to try to get in when there's major progress made at a project, but the macro is just killing these stocks for whatever reason, even if the actual macro thesis is really intact and like looking stronger than ever before.